Alright, I'm live on YouTube, if anyone wants to post that link, and VTF is doing this weird loading thing again, so we'll wait for that to hit, and I'll get started with the disclosure. There it goes. Alright, let's get started with today's afternoon meeting. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure hasn't changed despite a good bit of trading today. Alright. Okay, so let's dive into it. I'm a little disappointed with today's trading session here at the close, and I'm going to talk about that. SPYs here, closed up a nice 1.4%. Pre-2022, this would have been a big day. Qs here up 2.4%. IWM is up 1.5%. So I gotta say, I got some concerns. I have got some concerns about how today went, how the Fed went, and today's price action. At the end of the day here, even though we had a good little rally, and I'm actually really happy with how I traded today. I think I traded really well. I think that the call-outs here in the team were like, I don't think we could have navigated this market better on an intraday basis today as a team. But I'm talking big picture here. Big picture, I've got some concerns. I don't like this candle that I'm looking at to start with. This daily candle here with these tails on both sides. This is a candle that represents indecision, is really what it is. They sold us off our highs more than I want to see. They closed us below 380, which I don't want to see. We couldn't close into the gap. But there's no real downside confirmation on it either. We do have this nice little downside tail here also. So let's take a look at the other indices. Qs here, same thing. We closed a good bit off of our highs, but the Qs did still kind of close right at that gap. A little bit of a tail there, down there too. IWM, same exact thing. But the problem is, every day that we spend down here, it lets these moving averages catch up. That's bearish big picture. It's bearish big picture. If you're bullish on this market, you wanted to close on highs today. You wanted a little bit of a tail down here. You wanted the market saying, hey, we're going to go after this equilibrium area via price, not via time. Because if the market snaps back via price, we get to the ADMA, maybe run into some resistance at 389. Honestly, if today was a really good day, that's where we should have closed. 389, if today was a really good day. Like I said, SPY here up 1.3%, Q's up 2.4%. Pre-2022, that's a big day. In 2022, how many times have we seen 4% plus days for the NASDAQ? And you're telling me on like the most hype Fed day of the year, we're only closing, with a gain of 2.4%? Again, 2.4% is not bad, but we closed well off of our highs here. But the problem is that this price action, the more we stay down here, it becomes more of a time correction. Time correction is bearish. Time correction is bearish. This ADMA is very rapidly catching up. It was just a couple trading sessions ago that we were able to point to the market being at 375 with the ADMA at $400. This moving average is just catching up rapidly, and it's not because price is moving up to it. It's because it's coming down to price. So that's certainly bearish. So I'm not loving the price action that I'm seeing here. We had a real chance for a good close, and we kind of lost that. Probably because I let Pat take over the radio in the last 30 minutes. I guess we should have kept me on because when the market was making highs. but joking aside, I'm not loving this price action, and I'm not loving the message that's coming out of the Fed, to be honest. I think that the message that came out of the Fed today was very poor. It really wasn't good. But a lot of the 75 basis points, I guess, was already priced into the market with that massive sell-off here. The market was fully expecting it. I feel if we didn't sell off as hard as we did into this meeting, I feel like we would have sold off very hard in this meeting, if that makes sense. But we sold off so hard into it, a lot of it was priced in, that the market was able to kind of hold in pretty well. If we were still up here at 410 or whatever, which is where we just were a few days ago before CPI, this Fed meeting, I think, would have just been a complete disaster. He just sounds like, I don't know. I didn't listen to him speak, which is interesting, right? Because I remember one of the times that Jerome Powell spoke, and it wasn't on a Fed meeting. And RNBC, if you're still here, RNBC, RBCN, just forget your letters. If you're still here, I remember you and I actually listened to him one time, and then you and I were disagreeing with like the media because we listened to him and he actually sounded kind of dovish, but just the sound bites that came out of it was when Pat was on vacation. The sound bites that came out of it sounded hawkish, but he sounded kind of more dovish, and he sounded confident on the economy. I didn't listen to him today, but from the language I saw, I'm not seeing confidence here. I'm seeing the opposite. Less confidence about the economy, soft-ish landing, pulling back on the language that employment should stay strong. The 75 basis point hike, I know we discussed this a lot yesterday. I know there's some differing opinions on that, which is fantastic because, well, different opinions are what makes market, and that's what makes all of us better. But I know, like, Stefan and I were chatting. Stefan was kind of in my camp on it. I'm really worried here, and then with that retail sales number this morning, I'm very worried here that the Fed is going to hike us into a recession on things related to things that they can't do anything about, just because they're being pressured to actually do it. And exactly, Trader Mike. If you're aiming for a soft landing, that's not the language that should have been coming out of the Fed. Like, retail sale numbers are getting bad, but we're increasing interest rates even heavier into it because we got to damper inflation. I still think that inflation is going to come down. But my biggest concern, and I said this in May, and now we've got new yearly lows. I think that the market's really cheap as long as we don't lose the E in the PE multiple right now. I really think that we've gotten to a fundamental spot here. And again, you can still point to certain spots where there's froth. I know that. But I'm talking broadly. Broadly, I think that the market's gotten pretty cheap with where we are currently, where we were in mid-May, provided that we don't see earnings deteriorate. You're going to see earnings deteriorate in a recession. Again, and we've also discussed that not all recessions are created equal, so it will depend a little bit on what that recession looks like. But I don't know. I'm seem to be in a minority camp here that the Fed could go the wrong way and the opposite way, and I'm not like a permadove here. I'm actually usually this is just weird aftermarket prints that are going off. I'm not like a permadove. I'm actually usually more hawkish than the market itself, than the Fed itself actually is. So I don't know. I'm really concerned after this meeting. I'm like more concerned than I've been in a while actually after today on the market. I don't like the technicals here. I don't like how this daily candle closed. I don't like the language that came out of the Fed. I don't like the lack of confidence I'm seeing. I don't like the 75 basis point hike. Now, there was one spot here that caused the market to really rally that was better. At 2:35, when the press conference basically started, and he said, you know, don't expect the 75 basis point hike thing to be a regular occurrence. So I came into this Fed meeting thinking that Jerome Powell was going to have a different approach for kind of the same result of a little bit of what I heard today. Meaning, I thought that he was going to come in, do a 50 basis point hike, and then utilize very strong language for going forward. He actually kind of did the opposite as far as hikes go. He came in and did the 75 basis point hike, but had very weak language about going forward. So it's kind of like a different approach to what I think is the same end goal that he has here. And obviously he wants to show that he's doing something, but it was all the other language, right? It was the language on the economy, it was the language about employment. That's the stuff that I really didn't like. So we'll see. I don't have anything good to say, honestly, about our big picture technicals. We still are extended to the downside. There still is room for us to bounce. Tomorrow's going to be another big day, especially if tomorrow turns into a trend day. Because it is pretty typical, so it doesn't happen always, it is pretty typical that the day after a Fed day is a trend day. And honestly, with how we closed here technically, and the fact that we are still extended, but that we're less extended, I almost feel like flip a coin on which way we could trend tomorrow. We could trend higher tomorrow. We could easily, because we are still extended, though we're less extended. We could work our way up to this 80 EMA. We could work our way up to the space between the 8 and 21 EMA. If that buying comes in and we trend up. The opposite could happen also. We've now spent 3 full trading sessions down in this 380 area here. This 80 EMA has sunk from $400 down to $389. It'll be lower than that tomorrow morning. And we're not so oversold anymore that we can't go lower. The short-term tactical sentiment indicator that's been in the green for the last couple of days, which usually means it's difficult for us to go down, that's probably going to be out of the green also. And the intermediate time frame, which I think is very powerful, is probably getting out of that green zone also. So all of the things that we had the last 2-3 trading sessions here where it was like, well, it's going to be really difficult for this market to go lower, so let's see if the Fed can do the right things, let's see if we can get a price action retracement. We're starting to lose all that. But yet, we are still at 378 with the 80 EMA 389. So I don't have strong conviction, and this candle's not giving us anything. We didn't close on lows, we didn't close on highs, right? It's just like a doji candle here. So the price action is not giving me anything. The Fed's not giving me any confidence. The day after a Fed day oftentimes does become a trend day. And honestly, as of the close today, maybe I'll have a different feeling tomorrow morning when I see how we gap and can look for pre-market relative strength and relative weakness. I almost feel like it's a coin toss. And if I had to lean one direction on that coin toss, I probably would actually start leaning to the downside here. So really concerning, but there are some other factors that NAMCAP here just kind of mentioned that we should also keep in mind. It's quad witching. We've seen in these bearish markets that options expiration, especially this type of options expiration, has actually tended to lead, basically it tends to lead to moves kind of in the other direction of what we broadly see, right? So in 2021, when we're trending higher mid-day, mid-month, we would get retracements down like clockwork in the middle of the month, every single month, going into options expiration. Now that we've had a weaker market, we've actually seen the opposite. We've seen that has helped establish a little bit more of a bid. I still haven't seen any data. I may be a little early here. I'm sure we're going to start seeing it in the next week or so on end of quarter rebalances. You could have end of quarter rebalances that are very strong. We still also do have sentiment that's abysmal and positioning that's abysmal. That stuff also tends to be bullish, but that stuff tends to be bullish when you get a catalyst. That stuff tends to be bullish when the market starts to go up. That's the type of stuff that enables a bear market rally to become a very sizable bear market rally. We still need something that's going to actually bring us up. And I don't know if this Fed and tomorrow's trend day is going to be that. So for a lot of reasons, I think we're looking at a coin toss tomorrow, and that's assuming that we have a trend day. Just because something typically happens doesn't mean that it has to happen. But we'll reassess it tomorrow morning when we're doing our morning research, and we can digest more information, and we can digest the gap, and then obviously we will assess it with our intraday technicals and update it in real time. Speaking of those intraday technicals, again, I think we just did a fantastic job here on our team communication, capturing the opening kind of move here, getting out of the way for the midday price action. Midday price action here super sloppy, as we expected. And then this post 2 o'clock price action here, I don't think was particularly easy. We never saw too many major momentum moves, which is kind of a muted day here overall, outside of this one 10-minute rally when Powell had that kind of one dovish comment. Price action here overall, I wouldn't describe it as easy, but we navigated it really well. We knew to pay attention for that, so 378's our opening spot, right? We knew to pay attention to above 378, okay, we can look to be long. Below it, okay, be more careful. You got to look to be short, especially when you get this fast initial move up from robot buyers, whatever, and then it gets back below it. So all those buyers become out of the money. That leads to more downside price action. Then we had, then we were below this 376. We were calling like the space between 376 and 378 kind of neutral territory. So while we were below 376, I put a short on in here. I shorted a T-triple-Q. That did exactly what I wanted it to do. If this market totally rolled over and failed here, at least I got the short on to protect myself on the longs that I held into the report. But if it breaks up and stops me out, I'm fine with that because my longs are going to make me money. And we had enough of a pull in on that, so I was able to get the T-triple-Q position with the risk covered. So then when it stopped me out on that trade, you don't lose anything if your risk is covered. And then the market's breaking its way back up. Here was a little bit of a precarious moment for me, to be honest. 2:30 was right going into the Fed press conference was a little bit of a precarious moment because I'd gotten stopped out of my hedge, but we were making new lows. Josh called out the low of the day, so shout out to Josh on that. Seeing the tail here, I just looked over to the IWM. IWM was, and this is another concern that I have, by the way, big picture. IWM is still weakest. I don't want IWM weakest. I need the Russell to lead us. I need it to lead us. IWM here, broke this 170. I'm already stopped out of my hedge. Not looking good as we come into lows, but I know the press conference hasn't started yet. This tail comes in. Josh says, hey, you can look to be long here versus these lows. We're talking about covering risk into 170 here in case that now gets held as resistance, right? We just did a class today on support, resistance, breakouts, breakdowns. It applies in all time frames. So this is intraday support. Maybe that becomes resistance. Book a little profit into this bounce. Good buy, good call out from Josh. But then Powell says those dovish comments. We rip. We recapture that key SPY 378. We flip our mentality. Now, any sellers down here, anybody who got shaken out on their shorts, or anybody who had shorted here or got shaken out on their longs, they got to chase back in. So it's like the opposite psychology once we get back above 378. Now we can be looking for momentum. This was another precarious moment. This pull-in here was just a little bit deeper than we all wanted it to be, right? This pullback that happened here at 255, I really wanted this 378 to hold. I wanted this ADMA to hold. But when you're dealing with volatility, you get overshoots. So we overshot to the 21 EMA here. But then we got our pivot. This got real tight in here. We weren't breaking up. And then we finally broke up. But honestly, this was my second disappointment in here. Like, Pat said it right for the first time. When we ripped here to almost 383, Pat was like, we should have ripped to 385. Like, this should have been, we got into the gap. Like we could have gone much bigger here. And we didn't. And when we lost 380 and the ADMA didn't catch up, we price corrected. We didn't time correct. Like this action here wasn't bad, but it certainly could have been much more bullish. There was still a degree of heaviness to the market. So finally, we still kind of hold this pivot low. We get the second inside 5. It breaks up. We get above 380. And this was the same thing. Like, I know in hindsight here, it looks like you got 3 good 5-minute candles in a row. But I want us to get above 380 and get the momentum rip to start coming in. And it's still, like the heavy bullish action I wanted to see wasn't there. We didn't quite have IWM confirmation yet. We needed IWM to get above 173. That eventually happened. But we had other factors here that really ought to have been helping this market, and it just didn't happen. Look, UUP closed below 28 on dollar ETF. I don't know what 28, specifically turns into if you're comparing it to the euro or the yen or whatever. So it's just an ETF in its own world to watch the price action. But I'm figuring the movement in the dollar has been one of the key factors here on market strength and weakness. So is the IWM. The IWM, and you guys have heard me talk this to death already this week, the IWM has really been a leader for this market. That's why I'm concerned about IWM weakness, but so is the dollar. Dollar getting below, fine. First time it got below 28, it's extended. So it snaps back, and this is when the market snapped back down, right? This is creating a high here at 255. Look at the market, right? This is the low in the market. So dollar snaps back up, market snaps back down. But I just really felt that this weakness in the dollar here, we started getting below 28, and the SPYs weren't breaking out, and we were making new lows, and then the SPYs were starting to go, and we closed below 28, and the market didn't close well. So the market has a degree of heaviness here, and I'm struggling to attribute it to any of the correlated things that we're really looking at outside of the IWM continuing to be really weak here. And we just didn't get the good close. I'm very disappointed in this close. I'm very disappointed in this $5 pullback on the close. I need this close on highs here. I need this close on highs so that the big picture can have a good-looking candle here with a good-looking tail where we closed on highs, where I can have some conviction that we're going to get continued price action higher. I didn't get it. I got to close below 380. I got a $5 pullback in the close. I got an upside tail here. I got a doji that represents uncertainty for the market, and the market is telling us uncertainty. The Fed is telling us uncertainty. Therefore, I feel uncertain, which I think makes sense. So we'll see what happens tomorrow morning on it. But again, I just think we did a fantastic job on the market-related call-outs. I'm not even going to get into the individual stock call-outs because there was a bunch of really good ones that we had there as well. We recognized our relative weakness. We recognized our relative strength. We recognized the times to be able to execute where we had advantage. We also recognized the times when we had to pull back. You can't get any better than that, honestly. So shout out to the team here. Really proud of you guys. Really good job today. But I just wish I was here to give like a rah afternoon meeting beyond the fact that we navigated it well, but also just being able to feel super pumped about expectations for tomorrow. And I don't have that right now. I need more information. So let's see how we gap, and let's see what the intraday action looks like tomorrow. And I guess that's all she wrote. I'm trying to think if I had anything else that I really wanted to go over with you guys. And I think that covers it. Especially we had a really good lesson today too, so I'm a bit beat from that. But I'm happy to answer any questions that you guys have. So I'm going to scroll up into the virtual trading floor. And I'm going to look for questions. All I'm seeing is chatter about lobster. I love lobster rolls. Let's get some lobster rolls and some VTF lobster rolls around here. Yeah, Trader Mike, your capitulation dreams for the market are still possible. My only issue with that is I feel like too many people are looking for it. There's too many people here who are saying that the market can't end with a bottom that doesn't end with capitulation. And don't get me wrong, I would love that too. I love capitulation bottoms. They're very tradable. They represent tremendous risk-reward opportunities when you see that come in. I get concerned when too many people are saying the same thing, though. So many people, I've read so many articles, I've heard so many people say, this market can't end without capitulation. It can end without capitulation. It would just be nice if it ended with capitulation because it'd be very tradable for us. But yeah, it's still possible. Though this market's been so orderly still that it doesn't seem like it's close. Yeah. So scrolling through here. From from Denver Steve. Do you think we need a fiscal policy move to really make progress on inflation, like less spending? Yeah, but just good luck, man. I don't like getting into politics. I like just talking about stuff like that as it relates to the market. But the one thing about our political system these last, I don't know, it's been a while now, is that no one can get anything done. So we'll see. The one thing that I've been calling for is the one thing that no one seems to be willing to do, which is pull back on tariffs. I think the best thing that the government can do is just drop the tariffs. It raises costs for every good in the United States. Drop the tariffs, prices instantly go down. That's all passed on to the consumer. It's a tax on the consumer. Tariffs are a tax on the consumer. It's International Economics 101. And again, I understand the arguments, totally understand the arguments of the need to be able to produce goods in America for strategic reasons and all that stuff. But if you want to just talk very strictly about inflation, get rid of the tariff on washer machines. It's crazy to me. And it's crazy to me because, like, it seems like, you know, Democrats automatically undo everything Republicans do, and Republicans automatically undo everything Democrats do. And the one thing that I wish that they would just undo is the tariffs to help the inflation situation. And there was some chatter about it this morning, but Biden's too afraid to look weak on China, and he's not getting it done. And that would help lower inflation for sure. And then other things though, at the same time, like, you're gonna erase student debt for people. That doesn't help the inflation situation, right? And as much as honestly, I was wishing for years that any one of our presidents could get something done from infrastructure, because I drive over a bridge to get into Manhattan, and I feel like that bridge is gonna collapse under me one day, like literally, and they couldn't get that done forever, and now at this point you almost don't want them to get it done, because it's gonna be all these extra jobs and all this extra money that's gonna come into the economy, right? You want to use that when inflation's down, not when inflation's up. So yeah, sure. Can the federal government take steps here that bring down inflation? Yeah, they can. Will they? I wouldn't hold my breath. I don't care who's in charge. Unfortunately. So we're like totally reliant on China to not do COVID closures, to be able to get supply chain economics back online, to be able to bring inflation down, because the Fed can't do it, and the the federal government is too inept. Anyway, I guess I had really good P&L. I traded really good today, but I'm just not happy with this market. So maybe that's reverberating. Gunlock's calling for 10K on Bitcoin. Yeah, I mean, we're starting to build a bear flag, really. You know, the 80 MA hasn't quite caught up yet. From Rob C here, good question. Why short TQQQ instead of buying SQQQ, especially during times when their prices are similar? Time decay. I prefer to short leverage DTF, even though I'm long LABU, which is leveraged ETF. Broadly, I prefer to short leverage ETFs than buy leveraged ETFs, because time decay will help you. It depends on how long you hold it. If it's a very short day trade, which mine turned out to be, then the time decay doesn't help. But if the market was very weak and it was a swing trade, then the time decay would help. The question is the amount that the time decay helps, would it get offset by any overnight borrowing costs? And I don't know the answer to that one. But that's my general thought process. Yes, today's class was recorded. Reach out to one of our wonderful trading counselors. Reach out to info@t3live.com, and you can figure out how to get your hands on the course. From right here, I think if the oil price keeps jacking up, the supply issue is not cooling down, which I don't see it happening soon unless the war is ending soon. Q3 earnings will be brutal. And I think the next month's CPI data will clearly indicate if we are heading straight into recession or not. as small interest rate hikes like this are nowhere near enough to cool down inflation. Yeah, I'm agreeing with most things that you're saying here for sure. Though I do think that we're going to see that inflation number come down. I think that the June inflation number is going to come down from May, and then I think that I think that we're heading down here. So we got mortgage rates hitting 6.3% now. This market's taking a huge wallop. I think that there's a lag on when you actually start to see that pull off in the economy, which goes back to why I'm concerned about us hiking too quickly, because there's only so much demand destruction that the Fed can create. That's what the Fed is able to do to pull back on inflation, is to create demand destruction. There's only so much demand destruction that you can create without just destroying the economy. So if they want a soft landing, they have to raise interest rates enough to create enough demand destruction that they help to bring down inflation while they buy themselves time because time is the big thing that's needed for the supply chain economics to get totally back online. And navigate the whole thing in such a way where they don't create so much demand destruction that it brings us into a depression. Which, that's why I get nervous when I think that they start increasing hikes this fast without fully seeing the data. Because they made this judgment today to go to 75 basis points based on the May data. But I don't think that the May data had time to fully incorporate the 50 basis point hike that just happened. I don't think that you see that until June, July. And I don't think that you're going to see the effect of the 75 basis point hike here in July when we see the June data come out. There's a delay there. So it's like, I wish that they would, and I understand the urgency, I understand the pressure that they're under, but I wish that they could fully see the data before making those next decisions. Oil is obviously a big one. It's not part of core inflation. The one thing I was expecting today that did not happen was I thought that they were going to chat more about what types of inflation they can control versus what types they can't. I actually thought that was going to end up coming out dovish, but they never seemed to talk about that at all. And he really, if anything, it was the opposite. He seemed to really talk about inflation as a whole, not even core inflation. He seemed to talk about it with food and energy. And like you're saying, there's not too much that they can really do about the energy situation unless the war ends, and I'm not counting on the word end. I hope it does. I certainly hope it does. It's a terrible thing that it's happening. War is always terrible. But I can't count on it. So the only other way that the oil prices are going to come down is because of a recession and people are not traveling and people are not spending that money, and they still kind of are. So, or if we're drilling and pumping in the United States, but that's going to take a lot of time for that. Like, even if policies came out that enabled that, it's going to take a year to come online. Whew. Yeah, Lulu here at 4:35 in the VTF, copying and pasting some Powell comments that are exactly what I'm talking about. He just, like, these comments are so wishy-washy. It sounds so not confident anymore. You want the Fed to sound confident that they know what they're doing, that they got things under control, that you got to just bear with us on this, and we know what we're doing. And then saying, I think events of the last few months have raised the degree of difficulty, created great challenges, and there's a much bigger chance now that it will depend on factors that we don't control. Come on, man. Jerry here saying that growth names are relatively strong today. Is there a chance that we could see that follow through tomorrow? There is a chance. Let's check that out in the morning. That was something that I noticed pretty much right away after 2 o'clock, was that the Fed announcement was basically creating some degree of relative strength in growth. So yeah, Potential of a Morningstar Doji in the Qs. Yeah, we'll see if we get confirmation on that. We'll see. You know, we'll see if we. Obviously, today's range is going to be important going forward. How we break on today's range, if it happens tomorrow, which if it's going to be a trend day, we probably will break today's range one way or another, is going to be really important on confirmation on these technical setups here. Are we building out a bear flag? Are we looking at the Morningstar Doji? And this is not obviously the futures chart. From Aries, if you are if you are following the overall current trend and it's bearish, would you not be happy with how the market closed today? Sure. I guess if you are bearish, you're starting to get your next level of bear setup. I tend to lean to the bull side of the market. I'm not afraid to short, but heck, man, I also got a 401k. I got an IRA. I got retirement accounts. I don't need them going down another 30% from where they are. Granted, I'm not going to be able to access those accounts for a long time. I'm getting older fast, but I'm still a relatively young guy. I also just don't want it to become a real feedback cycle where that continues. When do we get Q2 GDP numbers? I don't know. I don't know when that data's coming out. Yeah, Steve, but they're not going to do it. If they were going to do it, they would have done it already. It's not going to happen on the tariff elimination. Good call here, spectator. Q's above the May lows. SPY's not on a closing basis. And IWM's never breached the May low, right? IWM, that 165, 170 support area is still a massive area here that we'll continue to pay attention to. So yeah, snapping back above, that's a good start. I just wanted a better close today. Yeah, Mike. I'm just reading Josh's comments in COMP. Whose market valuations have dropped below the total capital raised from investors. And you only got a few companies here who are special enough to fall into that. COMP, Blue Apron, and View. I don't know what View is. I mean, this Blue Apron was the worst IPO I've ever seen. Look at this. And they've reverse split it. They didn't open it this high. I remember this thing, the all-time high is the IPO. And it just dropped like a rock at the second that IPO came out. I remember saying this company makes no sense at all down there. But now at these prices, honestly, it's worth so little that it's a total lottery of a position to be in, which a couple of us are in, is like a total lottery at this point with a stop loss of $0. A little hoping and praying. And again, I still like the idea of, I mentioned in the morning meeting today, possibly building out a basket, maybe not on massive size or massive leverage, but building out a basket of potential takeover stocks. Maybe Apron's on that list, Roku's on that list, Peloton's on that list, Pinterest is on that list, maybe Sumo is on that list. Stocks that are down 75 to 95%, but actually have a business model that could be a creative to another company in a buyout situation. I'm surprised we haven't seen more of it. And I loved to hear that Kathy Wood's biggest fear is that some of those stocks are getting bought out because their prices are so bad. We said that in the morning meeting, right? Like this Path. I'm in Path now. I'm very interested in this company. I'm very interested in what they do, the automation stuff that they're doing. But I started getting involved in this here at, you know, $20 and in the teens. This is where I've been trading this thing. She's been bag holding from $80 and averaging down and averaging down and averaging down. I don't know what her average price is. I would guess her average price is like $60. So for me, if I woke up tomorrow and this path was getting bought out by a company, and I don't have this one on the buyout list. I just am interested in the company here. Maybe it should be. I don't know. If I wake up tomorrow and this thing gets bought out at 35, I'm gonna be like, see ya guys, open house. I'm out today. Pat, you're taking over, man. I made too much money on this. I'm out, taking a day. And Kathy's gonna be crying because the buyout price is gonna be $25 below her price. To headline inflation. Thanks, Steve. Just catching up on the comments here. Yeah, so Spectator, I hope you're reading Pat's note. Pat's note in the morning, the chart that he uses for the technical part is the futures chart. So we get both. I get to see what that futures chart looks like every morning. I get a snapshot of it through Pat's note, and I have that in my mind as I go into my trading day, which is going to be, you know, intraday for the market itself. Yeah, Nick here saying record inflation in the 70s and 80s didn't end until Volcker instituted 2 major recession cycles. While a recession is truly unpalatable, it could end up being the only strategy left for the Fed to take into battle against rising inflation figures. What do you think? So the first thing I do think, I still don't think that the Fed are dumb people. Like, you got to give these guys some credit. They're very, very smart, and they know history. They know what happened in the 70s and 80s. The biggest reason why inflation was so persistent in the 70s and 80s is because of how long we waited before we did anything about it. We just weren't doing anything about it in the 70s, and then other things added to it, the oil crisis that happened and everything else. But the problem when inflation hits and you don't start tackling it right away is, this has always been the big worry from day one, is you don't want inflation expectations to start getting built into companies' business models, because that then becomes very hard to get rid of. If you start having Target and Walmart and all these companies start assuming in their business model, accounting for ahead of time, that they're going to continue to see 6% inflation and 7% inflation, whatever it is, continue to hit, then it becomes extremely difficult to pull that out. So the difference, I think, this time around, obviously it's not a good situation. The Fed probably made mistakes. I mean, look, they definitely made mistakes. You know, they should have took the foot off the gas pedal as soon as the market was making new all-time highs after COVID. Instead, we continued to pump and pump and pump. We created a bubble. We created a bubble at the end of 2020 and 2021 in the stock market because we continued to pump so far after the fact. Hindsight's obviously always 20/20, even for the Fed too. But the difference now compared to then, I still think, is that even if we made a mistake there, we still are tackling this inflation thing. We're trying to tackle it right away, right? They're using their language. They immediately went from quantitative easing to quantitative tightening. It wasn't like they waited a while after the fact. They've immediately started going after it. And I also still think that the supply chain economics thing will in time come online. And as that comes online, it's going to naturally bring down inflation at the same time. So I think that this is inflation is always a very scary thing, but I do think we're looking at a little bit of a different situation than the 70s and 80s. So I do think, and I have thought, that the soft landing is possible. And that's why I'm so nervous about today. Because up until today, you know, there's a lot of market pundits out there, and market pundits love to be extra bearish, by the way, just because it always sounds good. And remember, the job of CNBC is to keep you watching CNBC. The job of CNBC is not necessarily to provide you information that's going to help you. So they love to get the people on there who make the extravagant call-outs. If you're going to go on CNBC and you're going to say something extravagant and insane, then they're going to want to keep you on because you get people, oh my God, what do you mean the SPY's going, the S&P's going to zero, right? So people don't want to give the boring answers on those types of channels, and it doesn't lead to information actually, come and help us. So yeah, that's what has me so scared about us potentially hiking us into a recession, because I've been in the camp that the soft landing is possible. I've been kind of agreeing with the Fed that the soft landing is possible. But then that CPI number Friday, real bad. Having to hike 75 basis points today, I also think is real bad. We really wanted to see that inflation number naturally coming. This market could look so different right now. If we saw that inflation number come in line or below instead of hot, and then the Fed came through with a 50 basis point hike anyway, everyone would be talking about when the Fed's going to stop, when they're going to go down to 25 basis points. The 25 basis points is going to be, right around the corner is going to be coming. The dovish pivot is here. Inflation is coming down. We could, in an alternate reality, very easily be looking at this Fed day with the SPYs at 440. It's a false print. With the SPYs at 440 instead of the SPYs at 375. But I don't know. That inflation data was no good, but I still think that we're near peak. And the 75 basis point thing is tough. Definitely tough. Yes, not every day. 4 days a week. So Spectator asked me if I do the review every day. We do it Monday through Thursday. Friday's the one day I let everybody go at 4 o'clock. This is where we get our work done, guys. This is it. We stay here and we work for an hour or hour and a half or whatever it is, going, reviewing the market, drawing lessons from the market, answering everybody's questions. This afternoon meeting is where you get better as a trader. The pre-market's about your research, the morning meeting's about game planning, 9:30 to 4 is about execution. 4:10 p.m. This is about getting better right now. This is about us becoming better, more educated traders every day. So yeah, yep, for sure. Yeah, I like SoFi too, man. I just did not like the price action today. I didn't like the relative weakness today. I mean, granted, it's been relatively strong 2 days in a row. It's already back to the 80 man, the daily, when a lot of these other stocks aren't there yet. So maybe it just needs a little bit of a break today. But it was, kind of remarkably relatively weak. It was flat to negative for a lot of the day, and we just couldn't go. Yeah, Peloton's on the buyout list. I don't know if Bed Bath & Beyond's on the buyout list. Diego saying the 70s are almost... Diego remembers the 70s probably pretty well. I think he was like 50 in 1972. Brant was like 60. So he knows it very well. New York City almost went bankrupt. It was a bad time for America. Just kidding. We love Diego and Brant. With age comes wisdom. And where's Greg? We used to have a funny saying in the fighting world. When you get like two old guys getting in there, you have to age in the cage tonight. If crude pulls back to 90 something, you'd feel better about equities. Yeah. Jim Cramer last night in CNBC said raising it to 100 basis points in the market will rally. Studio 54. Dude, I would love to be able to go to Studio 54 for a night. See what it was like. Alright, gang. 5 o'clock. Looks like we got through all the questions. Again, good stuff here. Some of you guys who are guests in the room are acting as really good contributors, and I love that. And I think that this is a room, you know, it's a virtual trading floor here where it's give and take. And you guys are giving and taking, and I love it. So, you know, you're welcome to become a part of this on a more permanent basis. And for anybody who's newer and you're more absorbing, first of all, I said it already, don't be afraid to put yourself out there and say stuff and ask questions. It's how you learn. And, you know, stick with us also, because 1 week in Pro Desk is not nearly enough to learn the stuff that we're talking about here. And then when you fully learn it, then you're really part of the team and you're not going to want to go anywhere anyway. So reach out to your trader counselor. So that's it, everybody. Have a fantastic night. Get some rest. Bright and early tomorrow, we'll be having the research in the VTF starting at 7:30 like we always do. And we will see what happens. We'll see if we get a trend day. Good night, everybody.